Good morning, everybody. Well, good evening, good night, wherever you may be around the world. I hope everyone's doing wonderfully well. I'm pumped to do this. Special shout out there to Tom Crown. I see he's in the group, and I just love seeing that. So fantastic, buddy. Great to see you coming on in. And we're going to get to some good old fashioned crypto analysis as well as some chart analysis on stocks, commodities. We're going to cover the gambit. We got news this morning on the back of Walmart and Home Depot earnings, and both of those stocks are getting hit. So we'll talk about that. What are the levels to where the trade setup will be lucrative for a potential day trade, maybe even a swing trade opportunity on those names? So let's get started, guys. And again, rock and roll here. Number one, let's touch base on where the markets are sitting. So we do have the S&P futures trading sharply lower this morning. This is on the back of more concerns about interest rates going up, the economy remaining strong. And yes, you heard that right? Think about this. The economy is strong, so stocks are going to fall. Kind of messed up thought process, but the bottom line is a strong economy means higher interest rates, or at least higher for longer before the Fed is willing to cut. So that, again, is a negative. If we look at the 10-year yield, and I'll pop up my chart in just 1 second here to take a look at it. In fact, let's do it right now. Let's take a look at the 10-year. So this is the 10-year yield. And the reason why you want to pay attention to the 10-year yield is it's basically going to be inverse to generally what the stock market does. The higher yields go, remember the psychology of it. If you can make 10% in a bond, why would you risk investing in a stock when there's risk of that stock going down? So there's a trade-off, right? Now, some people are going to require 20%. Some people are going to require 2% return on a bond to make it worthwhile to switch out of stocks. But there's a trade-off, meaning that the higher yields go, the more people are going to say, you know what? I have this, potential to make risk-free 5%. Let me not risk my money in Tesla stock right now at these levels. Let me put it for that guaranteed 5%. And that's why higher yields in general are a negative for the stock market, right? It forces money or draws money out of it. This is why in 2021, when interest rates were zero, there was no one that wanted to be in the bond market. Everyone said, hey, why would I be in the bond market for a 0.01 return in my money market or in my CD or in my bank when I could just go in the stock market? Sure, there's risk, but you know what? I'll take that risk because at least there's nowhere else to put my money to make any money whatsoever. So that was the trade-off, and I think that's important to kind of recognize and go from there. All right, so let's go to the crypto charts here. Let's get right into Bitcoin, see what we got. So Bitcoin, guys, you can see clearly continues to run into major resistance. The 25,300 level continues to be the level that I have on the chart that is a sticking point for Bitcoin. All right, the reason it is, number one, you have a beautiful parallel channel right here. Look at the trend line, how it kind of connects through these highs, and then look at how many times we've pierced this line and haven't gotten through. In addition, the highest pivot, this is the highest pivot since the June collapse, right? Since this collapse over here, the highest pivot was at 25,000, approximately 300. So it makes sense that that's going to be a sticking point in the near term for resistance in Bitcoin. Now, again, am I short Bitcoin? The answer is no. In fact, in Verified Investing Crypto, we still have a long on Bitcoin, but I am kind of itching to move out of it and potentially short it. Now, we do have other short signals out there. Over the weekend, I pulled the trigger on an Avalanche short. So if we take a look at Avalanche here, Avalanche had a beautiful kind of move up on the daily, collapse to support, move back up, and then you're basically right into this resistance. So for me, we had already made about 16% on this short prior, and we covered it. Now it had gone right back up to where we shorted it before into resistance. I said, you know what? Let's try a good old-fashioned rinse and repeat. And the idea there is that it's double top, resistance, and also the Bitcoin chart is at resistance. So what I'm doing here, folks, is I'm using Bitcoin as a proxy. All right, so if Bitcoin breaks above that, then that would be a bullish thing for other cryptocurrencies. As long as Bitcoin doesn't break above this area that I've just shown, then in general, that's a negative for other cryptocurrencies. All right, so that's that one. Let's go to Ethereum here, see what Ethereum has in store for us. Now, Ethereum continues to have kind of the same channel lines up here. There's a lot of resistance. The positive on Ethereum, you could make a case that it's making bullish consolidation. It's not the prettiest, right? By no means is it the prettiest bullish consolidation, but it would be classified loosely as bullish consolidation. Now, what does that mean? Well, it could mean we have one more move up to maybe around $1,785 before we hit major resistance. All right. So again, keep an eye out for that. That is a possibility on ETH that you could have one more move up. What would change my mind? See this upsloping trend line that we got below briefly and tag this support. If we start trading back below that, that would negate the bullish pattern, and you'd have to start expecting a bigger move back to the 1300 range on that chart. All right, let's keep going, guys. I want to look at the SPY chart here. See what we got going on here. And again, bullish consolidation right there, again, on the S&P 500. Now, this is prior to what we're seeing today. We are seeing the spiders dropping pretty sharply. I'm not looking to play this bullish consolidation. Instead, I'm waiting patiently for a retrace to what I call the scene of the crime. What is the scene of the crime? Let's do some education right here. The scene of the crime is basically when you have a major breakout of a trend line and you retrace to that scene, essentially, of the breakout crime. All right, so if we zoom out on this chart on the spiders, you have a pivot high from the all-time high in the S&P, pivot high, pivot high, pivot high, pivot high, and you broke out right here above the blue line. So if we get back to that blue line, there's a swing trade opportunity, not a long-term. I'm not a long-term bull on the S&P, but a swing trade long, absolutely right there. That's at around 393 on the SPY, which is the tracking ETF for the S&P. Let's take a look at Walmart. So Walmart came out, their earnings were not good whatsoever. Take a look at this, guys. So basically what we're seeing this morning, and I'm going to go to my my after hours or my pre-market data here so we can see in the extended hours, this is what it's doing. So initially it rallied higher, and then people started to look under the belly of the earnings. And this is why you always want to be careful trading earnings pre-market or after market. The first move, we always say this in the trading world here in my trading floor, we say the first move is usually the wrong move. All right, so in this case, that's exactly what happened. It spiked, and then people looked at the guidance, and the guidance was horrendous, and we saw a big drop. Now, you have seen a little bit of a bounce here in the early kind of the late pre-market before the market opens. The market's open right now. Looks like in about basically just less than an hour's time. All right, now what I want to do is go to the daily chart. So right away, let's flip back. We know that it's at 142.40. So where is a swing trade level? So the first thing that kind of catches my eye is the fact that you can see this upsloping trend line. All right, the upsloping trend line, if we extend it out here, is right there. Now, based on this chart, it looks like we are going to open, and let's flip back here, we're going to open right above that line. So here you can see the pre-market price, 142.40 approximately. If we go back to the daily, we can see that that line is at 141.50. That is going to be a major line in the sand. All right, so if that breaks, be very careful. You'll get day tradable bounces. I see a very good day trade that I will take in my live trading room today, which will be right here. If we were to flush to 138.75 for a day trade. Remember, day trades, folks, for those of you that do not know, day trades are quick in and outs intraday. So you're not holding it overnight. You're not holding it for a week, a month, a year. Day trades specifically, you're in and you're out. So that would be a potential day trading level. Basically, what you do is you do a chunk of money, you throw a chunk of money at some shares, you look for a quick bounce, and you exit that trading opportunity. All right, so next, if that breaks, so basically if the blue line breaks, day trade right here at 138.75. If we head lower, we're looking at a major support level of 132.75. Now, this would be a swing trade opportunity. This one is a major technical trend line. In fact, look at this trend line, how it goes all the way back down to 2015. And you did pierce it briefly here, but then you reestablished yourself right here with a bounce and right here with a bounce. So that right off the bat tells me that this is now major support again, 132.75, 132.50 as good technical level. In addition, check this out, guys. Want to see something else? Take a trend line right here, right? Let's take this and connect it through these levels, okay? And what do you get? And look at this trend line. This is why trend line analysis is by far the most important thing. Notice on my chart, I don't have a million indicators. I literally don't even show volume. Now, again, will I use the occasional Fibonacci retrace? Yes. Will I use moving averages on occasion? Yes. But the bottom line is simple is more efficient, and it keeps you from getting confused. So look at this line right here. Pivot point, kissed it here, hit it here, pierced it here. And then look at how you broke through it. And then on the underbelly, you hit it. And then you kind of chopped around it here. And look at the line and the convergence. Convergence of two lines, right? When you have two lines that converge at a perfect price, when price falls into it, that is unbelievably important and even more support. So what it does is it gives me a second factor for my swing trade potential at around 132.50, 132.75 on Walmart. All right, let's go to Home Depot. So Home Depot, guys, and again, I did some drawing on this chart. You can ignore that. Let's go to the intraday. Home Depot is falling decently. Look at this fall on Home Depot, guys. It closed Friday, 318. It's at below 305. That is a big time drop. All right, so a big time drop coming on Home Depot. Let's flip back to the daily chart. Again, 304 is where we're at pre-market. I'm going to get rid of these lines. It was when I was teaching in a course lesson recently that I put these in. But the bottom line is you had choppy sideways action. We're now collapsing. We're now trading at 304, which is right down here. Where is support going to be for a day trade today? Not swing trade. We're not getting to swing trades yet. For me, I'm a day trader first on an intraday basis, a swing trader second. So you have a little bit of support right at this pivot. You can see this high here. We can put a line right there. There'll be a little support at 292 and then even more support at 287, basically 286 to 287 on the charts. All right. Now, again, what does this mean? When I have two levels that are close, let's do some more education. Okay. When you have two levels close on a potential trade, how do you utilize them? Which one do you take, for instance? The answer is this. You take both of them. Now, what I will end up doing here as a day tradable level, if we see a fall into 292, I'm going to buy a portion of what I ultimately want to own on Home Depot. If it continues to fall, I buy at the next level, the second level down. What that does is it gives me the dollar cost average that is much, much better. In addition, what it does is even if it doesn't fall to the second level, I'm participating in a bounce if it occurs. All right. So again, that's super, super important here. And by the way, guys, do me a favor, hit that like button. I want to see those likes come through. Make sure you follow this stream on YouTube because I do literally 2 of these a week, and I'm going to start doing them almost daily. So if you're finding these useful, make sure you are following and liking. Absolutely. All right. So that's what we're seeing here, guys. So that's how you handle when you have two levels that are very good. That's how you handle it. Now, what about a swing trade? Can anyone guess? I think you guys can with the white trend line. This would be your swing trade level at 273. If it fell, let's say, in the next 2 weeks into 273, that would be your swing trade level. So day trade right up here, swing trade right down here. And obviously, if it gets below that, there's other levels. I right away see a level for another potential swing right down at this level as well. Notice again, pivot high, support, and then hits it here and bounces. This would be a retrace to, you could argue, a scene of the crime at around 245, but that's way down the line. I don't foresee that happening today. All right, let's take a look at a couple other things. So let's look at natural gas because natural gas continues to befuddle even me. And what this shows you folks is that even I am not without, uncertainty. Like everyone, and I want to be clear on this. And thank you there on that CML leukemia story. I appreciate that. But basically what we're seeing here, look at the rollover in natural gas. Again, this morning, we're seeing more forced selling. And what I want to tell you guys about this is that natural gas to me is a no-brainer on a swing basis that it will recover. It will have a big bounce. But it tells you also that a chart can still fail. And this chart continues to fail at key support lines. And so what this means is there's nothing that's going to be perfect out there. You can't be 100% trader. You never will be. All right. The market is the market. All you can do is get probabilities as high as you can. For me, that's 70 to 80%. 70 to 80% success rate. That's the best I've been able to ever achieve in the live day trading room. Granted, we're in the 90% range, but that's day trading. It's much shorter time frame. We're just jumping in, we're jumping out. But that's what I want to make clear to you guys is that you really have to understand that you're never going to achieve perfection. If anyone ever did, then you're off and retiring and you're just off on your yacht living in the Mediterranean, whatever you are. But the point is, the markets keep you on your toes. And Lance saying, Gareth really chased natural gas. No, I didn't chase it. My entry, literally, if we get a 15% bounce, which is about 15 cents on natural gas, I'm break even. But the point is that I thought it would bounce already, right? So I think that's the key, is that, again, this is why I average in. I continue to kind of accumulate slowly, so it gives us that opportunity to make sure that we're close to the levels. But there's no doubt that I would have expected a bounce on it already, and it hasn't happened. All right, let's take a look at gold. I want to look at gold here. The gold chart here, we are seeing it trying to hold support right here. I still think there's one more move down on gold here, down to this level here around 1800 before it becomes a full-fledged bull market. So again, we'll watch that to see, and we'll go from there. Okay. All right. So that's one of the things to kind of keep an eye on here. Let me look at CSX real quick. So CSX, guys, the chart is mediocre at best on the daily chart. I'm not really seeing much. I see this trend line, which is what you want it to break. If you want to get a breakout, you have to get above 3270. You get above 3270, it's off to the races higher. All right, then you're talking about 34 to 35 bucks as a next target. The one thing you don't want it to do, right? Check out this. Look at this trend line here. So if we take this pivot low and connect it to this pivot low, basically what you have forming, and it makes sense, right? Look at the tight range that it's been in all over here. So it's basically in what we would refer to as a wedge pattern. And a wedge pattern, again, this is a slightly bullish wedge because you have a bullish consolidation inside bar, but it's not super bullish. Like, I wouldn't rank this as a high percentage trading opportunity. Essentially, it's not something that I would be taking. But if you are in it, you want to see, if you're long this, you want to see a breakout above 3270. And what you don't want to see, where you would keep your stop, is any daily close below 30 and a quarter. So it basically gives you a range there of what to look for on the chart. Okay. All right. Next up, let's take a look here and see what else we have on the chart. Let's go to the silver chart real quick, and we'll go from there. So the silver chart, guys, it did hit support. I did pick up a little SLV with my trading group at Verified Investing Alerts, which is at inthemoneystocks.com. And again, we are in the money slightly on that. I added right down in this lower range right here. And again, I will continue to add. There's a lot of support here on silver at all of these lower levels. I think the most downside you probably would get would be around $20.80, somewhere in that vicinity. But I actually do like silver now. Silver is now pulled back into a range where it actually makes more sense for me. Okay, we'll do one or two more questions. Let's talk about Tesla today. So Tesla has remained resilient. It was up on Friday. I think pre-market it is falling. Let me just double check. Yep, it is down pre-market at 205.70. But the most important thing on the daily chart is that it's into major resistance here and here. So could it go up to 223? Yes. But between these two levels, I expect a big pullback back to about $140. So be very careful if you're long Tesla here. This is not something that you want to remember. The stock has rallied 100% off of the lows. So you shouldn't, for me, I never buy something that's even up 5% off the lows. I just don't want it. I'm not going to chase it. That's the key. But the discipline in trading, the mental mindset of a trader is what makes me a legitimate, successful trader. If you have no discipline and you're buying things after they've rallied 100%, aka Bitcoin at 65,000 or 69,000, you will ultimately lose money. All right, you'll lose everything. It's just the nature of the beast. All right, guys. On that mark, I've got to get going. I have a bunch of things to accomplish this morning before I get on my live trading room. So I thank you all for coming out. I'm going to do another one of these probably on Friday or Thursday or Friday morning. So stay tuned. But thank you guys for coming out. Let's make some money today. I'll see you guys in the live trading room that I have at inthemoneystocks.com.